this banger. Yo. What's up, YouTube? How are you doing? How are you doing? You want to know the song, by the way? You want to know the song? I'm pretty sure some people at least want to know this song. Man, it's such a banger. Yo, Jim Joseph, no idea, right, who it is. Never heard of him, but I saw his song in the non-copyright playlist here. And I was looking for an intro song, found his song, a nice 3-minute and 20-minute banger. And that is pretty much the theme song of of the channel. I might actually have to write him a message and say like, yo, Jim, I have no idea, like, you know, how and what, but I'm using your song in the live streams, and it would be fun to get in touch, and you know, maybe I can do something for him in return. But yeah, very nice, very nice. Love that banger. Cool. How you doing, YouTube? Hope you are good. Hope you are good. What a beautiful morning, and what a great start of the week. Probabilities of this morning played out in, I mean, perfectly. Very, very nice resistance at the target box, and I will go through this move in a bit more detail. But once we hit a 618, not this one here, but a 618 over here, somewhere around 64.7-ish was it, probabilities were higher to continue towards the downside and at least look for the lows over here, which we now did. So we already took those lows, of course. So yeah, good to have you here. Good to have you here. Saraga, welcome. Malone, Thomas, Hamza. Let's go, bro, indeed. Mido, good to have you here. Prem, welcome. Silan, happy Monday. Happy Monday indeed. MS, Lafayette, Louisiana. Oh man, Louisiana. It sounds beautiful, no? Kevin, good to have you here. Konstantin, welcome. Habibaldi, the music is amazing. Oh yeah, I like it, yo. Ayman, welcome. Good to have you here. I just sent you an email. So everyone that has sent me an email now has a response. So make sure to check your mailbox, because just before the live stream, I made sure to answer all the emails that I had for the past hour. And here we are now. So everything's been sorted. You all have access. Everything is good, beautiful, nice. And yeah, nice. Mike, how you doing? Welcome. Kevin, good to have you here. Jen, good morning. You were right, doing a retrace with Impulse. Yeah, I mean, the start here looked like a double 1-2, so kind of looking for then 3, 4, 5, 4, 5. Actually, maybe like another sideways range, at least one more low, maybe then a retracement. We have some support down here, but we're gonna cover everything. So, Yo Ray, how you doing? Enki, Crypto Aman. I don't have sent email. I have one giveaway. In that case, Crypto Aman, send me an email. Right. I actually think you may have written something in Telegram, if I remember correctly. But oh man, last night in Telegram team in Telegram. If you're here, you know who you are. You guys, 800 missed messages this morning when I woke up, and I was in bed and I just scrolled through the whole 800. It was like reading a book. But I loved it. It was good chatting. Hello from Friesland, Sniper Paul. How are you doing? Madur, good to have you here as well. CryptoMon, by the way, send me an email with your Discord, YouTube, Telegram username, and I'll get you sorted. I'll bump you up to silver and get you access everything as soon as I got your email. Suhail, how are you doing? Welcome. Mateus from Brazil, other side of the world, the beautiful country with yellow and green. All right, man, one day I have to visit Brazil. Man, only the food, the Brazilian barbecue, that is a reason by itself to visit the country. Yeah. Now we're not even talking about the beauty, yeah, and the jungle, by the way. Isn't the big river running through Brazil, right? That the big well-known one with all the crocodiles and stuff, alligators. What's it called? It's that big river. I forgot the name. No, I think it's there. The one you always saw on Discovery Channel. Oh, it's just north. Oh, very far. Ah, well, my geography has never been my strong point. What's wrong with haring and stroopwafels? I actually have not eaten, I have eaten haring, but not the traditional way. Stroopwafels, you can give me anytime. Anytime. Okay, let's start. Oh yeah, so this is local stuff. Let me actually put this down in a folder. Drag it down. I will pull the fibs on my chart later. Okay, very, very nice. We now hit this resistance, so I'm going to turn this one white. And we are very close to support, by the way, which is a weekly and weekly naked point of control. That is what's inside the box over here between pretty much 63.1k and 63.2k. Now, in this particular live stream, everyone, we're of course going to cover Elliott Waves. I will also talk to you about my thoughts this morning and the reason why I expected a move to the upside to take at least a double top, at least this high over here, and then also that high. But because of the structures, also looking for a retracement. So the probability shared this morning in the morning update was this. It was a little bit of a story this time, right? Usually I like to explain myself, but this was a bit more than usual. But it's pretty much like written here, right? So moving above 67k is still quite a stretch. With the bullish CVDs and an uptrend, probabilities are high to take the highs. Now, over here, we took the highs, right? That is what we were talking about over here. Potential to end a wave C in a diagonal or an impulse, so eyes open for a potential retracement, right? So take the highs, eyes open for a potential retracement. Now we get a potential retracement locally. So let me start with what I was looking for locally, and then we zoom out a little bit. Okay, so Adam Davis, how you doing? Good to have you here. The Amazon River, yes, Prem, that's the one. Bitcoin go up or down? It will go sideways, that's for sure. But if it goes up or down, we're going to check the probabilities. The time is almost 10 minutes, so let me wait a few seconds. Thank you, Mark. I was checking. Oh, pleasure, Konstantin, and yeah, B channel. I'm not sure if he's here, but make sure to thank him. What's up, Stacen 2K? How you doing? Cool. We're gonna start with the local stuff, and then we're gonna zoom out. Okay. So, right. Let's start with the probabilities explained in the morning. So we had some bullish CVD divergences locally. And we were, of course, ranging sideways throughout the weekend. The weekend pretty much started over here. And then, of course, at the beginning of today, we moved towards the upside. Because of the bullish CVD divergences here, especially with the drop to the downside overnight for me, the probabilities increased to at least take this high once again. Now, even if we think about a wave 5, I do like to see candles closing above a potential wave 3. So we still have to wait and see if this is actually a wave C or a potential wave A or 1, right? For more downside in the bigger 3 wave, but I'm going to talk about that in a second. Probabilities locally, though, higher to take the high, at least closing some candles above the previous high would be nice. And we also had the double top. So that was an extra reason to look for price to move towards the upside. So we moved towards the upside. We hit resistance over here. Now, what I was keeping an eye on at this moment in time was the following. And let me also share this here. So I was looking for this. Highest amount of volume was in the latest move towards the upside, right? So we over here got this move to the upside earlier today. I'm going to show this on the chart in a second. Price moving up, high amount of volume. So therefore, if we look at for an impulse to the upside, we want to at least see another smaller range, price not hitting the 618 taken from this circled low to the high, and then make another high on lower volume. Because then we can talk about an impulse, right? 1, 2, 3, 4, 5. 3 most commonly has the highest amount of volume. Then you get a 4 and a 5 on lower volume. That's then what we are looking for. Now, price hit that first 618, then I pulled another 618 from the lower low here to the high. If we hit this, it again increases probabilities to take the double bottom. We have here at 63.6k, right? And well, pretty much that is, now we're here. So that is what I was looking for. So in a nutshell, on the chart live, we had this move towards the upside on the highest amount of volume in this local uptrend, right? Very, very local move towards the upside, highest amount of volume. So in an impulse, naturally, what we're looking for is a 1, 2, 3, 4, 5, and even inside maybe 1, 2, 3, 4, 5. So we want to see a 4 range and then eventually a 5 towards the upside. Now for that wave 4, what we don't want to see is price hitting the 618, because that invalidates a wave 4. So the moment that price came down and hit the 618, it increases probabilities to look for price to move down, right? And then I changed the fib from this low to the high. And then if we hit this 618, it again increases probabilities to move towards the lows. Now, currently we have hit those lows over here, right? So that is where we are at the moment. Now with this current move towards the downside, because, first of all, let me talk about this. Over here, looking for an impulse to the downside would actually be nice to hit the support instead of moving up before hitting the support. But this move to the downside, I currently had this sketch on my chart here. So on the lower time frames, 5 minute, there is the potential here for a double 1, 2, 1, 2, 3, 4, 5, 4, 5. Of course, it can also be a single 1, 2, 3, 4, 5, move finished, retracement to the upside. Very much depends on if we hit the 618, which you then take from the high of 2 to the current low that we have, right? And then let me do this. So let me remove that. If we are looking for a 3, a 4, and another move to the downside in a wave 5, for then 1, 2, 1, 2, 3, 4, 5, 4, 5, the 618 is your invalidation. The moment the 618 is hit, we're not going to be looking for a wave 4 and a wave 5. If the 618 is hit, we're either looking for a wave 1 or A, 2B, C3, or this is a wave C finished and we look for price to continue its way towards the upside. And the reason I say this, by the way, is because price over here moved towards the upside on the highest amount of volume as mentioned. We didn't make a wave 4 and a 5, making another high on lower volume, which therefore increases the probabilities that this high here is a corrective high in potentially then a B or an X. And that's something I have in the back of my mind, that even though price is moving down, we ended a structure on a high amount of volume, which does increase probabilities to look for a potential B or X. Now, in that case, we then look for a flat or a WXY, but a flat makes most sense, especially with this move to the downside. So what we then have to look for is a wave A, B, C. Wave C then has to move below these lows, or more locally, A, B, C, where this is a 3-wave structure, right? So you have a 3-wave move down, 3-wave move up, 1, 2, 3, 4, 5-wave move down. Again, preferably we actually hit this box. That would be nice, right? 1, 2, 1, 2, 3, 4, 5, 4, 5, not hitting the 618 that I just spoke about. But because we did have a top on high volume, it is something I keep in mind, that this move down could well be a wave C of a flat. How do we know? Right? What we are looking for, this move down, either wave C, A, or wave 1. How do we know? We know based on the move back towards the upside, the retracement, right? So if price is falling here, which it does right now, hopefully one day hitting this support would be nice. If it doesn't, it doesn't. But we at least have the best area of support here. If price moves towards the upside correctively, a 3-wave corrective structure, right? Then we're going to be looking for an A or 1, 2 or B, 3 or C. Right, and we're going to look for lower prices to come. Next area of support, 61,750, daily naked point of control. If price, however, is going to have a 1, 2, 1, 2, 3, 4, 5, preferably another 4, 5 really, and then hits this box, and then starts to grind towards the upside, creating some waves, right, and then shows some proof of support, maybe some bull CVD, some volume coming in, a bullish market structure, potential for a couple of 1-2s. That is the moment where we're going to look for impulsive structures, right? So if we get impulsive structures to the upside, which is only one of 3 things, it is an impulse, meaning 1, 2, 3, 4, 5, right? A diagonal, 1, 2, 3, 4, 5, corrective structure. And then continuation to the upside in wave 3, or a double 1, 2, or triple 1 2, which is pretty much looks like a diagonal. 1 2 1 2 1 2, and then boom. Preferably here you also see some bullish CVD divergences, right? Then you're going to move towards the upside. So the move to the downside is very nice, but there's definitely probabilities for this high to be a corrective high. So with regards to trade management, that is important to keep in mind, right? With this move to the downside and the potential 5-way finish and continuation up. The retracement will give us all the information that we need, but we don't yet have that retracement, right? We're still waiting for that retracement. Maybe we're going to get it during the live stream, who knows? But at the moment, it is not yet the case. We do so far not have any bullish CVD divergences with previous structures. So with regards to CVD, it is best to keep an eye on what is happening locally and see if we can find some strength to move back above the high. So that is something that is important. Impulsive move to the upside, we look for the high. Corrective move to the upside, we look towards the downside, right? That's pretty much what we are going to keep an eye on. If we are looking for 1 2 1 2 3 4 5 4 5, then we take again a fib from the high here to the low, and your common target area for a wave 4 is between the 0.5 and the 0.236, and the 618 at 64600 is an invalidation. The moment this is hit, we're going to be looking for B2, that's bearish, right? 1 2 3 or ABC, or we're going to be looking for the highs depending on the structure to the upside. At the moment, we didn't even hit the 382. Your most common target area for a wave 4 is the 382 to the 05, 64.1, 64.4, so not bad. And also, if we do have a 1 2 1 2 3 4 5 4 5, the wave 4 of a higher degree likes to retrace to the wave 4 price action of a lower degree, which then is this range here. So preferably you see wave 4 moving up, potentially hitting the 382 or at least the price action of this range, which is kind of happening. And then you want to see it fall once more. So yeah, we do have some interesting support here. And it would again be actually very nice to hit it. And if we don't, then we don't, because we don't control price. We can only play the probabilities and try to make sure that the probabilities are in our favor. With regards to my alarms, I'm going to actually put an alarm. So I have an alarm just above this box. I'm going to put an alarm at the 618 as well, because we're going to zoom out now. So we covered everything locally. What am I going to do with this? Am I going to keep this in the folder? Yes, I'm going to do this. Put this in the local folder. Make this count white so we can color code it a little bit. There we go. Quickly putting a volume profile, point of control. So it's there. Okay. Value area low is also in that box. Okay. And we will see what happens next. With regards to volume, by the way, we did actually have some increasing volume to the downside here as well. Price moving down, volume moving up. So, yeah, potential 5-wave move finished, or looking for one more drop. Ideally, hitting that target box, hence my alarm here. For the ones that missed it, in this box we have a weekly naked point of control and a weekly time frame horizontal level. Okay. With regards to support and resistance around the corner, we have the daily naked point of control, 61750. Below the daily naked point of control, we have a 2-hour gap, 61.4K is the top of the gap, 59.5K is the low of the gap. To the upside, we have resistance here, next 68.2 to 69.2K, if we can pass this box here. And in that case, we will be looking for a flat, right? So it depends on the retracement to the upside, as we have just discussed. Let me zoom out then. Not the weekly, that is a bit far. Let's go to the 4-hour time frame. And now I have the chance to explain a little bit more compared to the morning video, because in the morning video I shared a couple of scenarios on the 4-hour time frame, and The goal of sharing more than 2 scenarios, usually one bearish, one bullish, was to explain to you why certain scenarios have such a low probability, especially the more bearish ones compared to more bullish scenarios, right? So we're going to cover that now, but in a little bit more detail. What's up, Jeroen? Welcome. Welcome. So are you looking to sell? My friend, I'm already in a short. Of course, everything is managed very, very well already. And I'm absolutely perfectly fine. Risk is absolutely minimal already because I've been moving my stop loss, which is now pretty much at break even. So the moment the impulse was invalidated and the 618 was hit, yeah, that was that. Typical Elliott Wave type of trade, but yeah, everything already managed very nicely. So anyway, let's jump into the scenarios in this range. Thanks, Mark. What's up, Ramjack? How you doing? So I'm going to cover the same scenarios, but I have a bit more time to explain some stuff. Our chatting and Q&A this live stream might not be too long compared to the usual because I'm training my wife to run 21Ks, half a marathon in Nice later this year. So we have to go for a run as well. But nonetheless, let's start. So the first scenario here, this is your bullish scenario. Welcome, Mahipal. Good to have you here. A sideways double combo WXY. It's a mouthful, but basically what we're saying, we are looking for a 3-wave corrective structure, and then we want to see continuation to the upside. Inside wave X, which is where we are right now, we are looking for an expanding flat, which is a 3-wave A, a 3-wave B, and then a 5-wave 1, 2, 3, 4, 5-wave C. In this scenario, you want wave C to move above wave A, which means above 67K. Therefore, it is absolutely vital that this impulsive structure on the lower time frame is a wave C. Hit the support that we just spoke about, preferably, right? That would at least be nicest, 63K to 63.2K, that would be ideal. And then you want to see price moving back to the upside. If you lose that support, then we're going to be looking for support at the daily naked point of control and move towards the upside for a wave 4, right? So we have 1, 2, 3, 4, 5. Finish 5 above wave A. That is what we're looking for in this scenario, because an expanding flat wave C has to move above the highs of your wave A. If it doesn't, we're going to talk about running flats, A, B, C, C not taking the high of A, but a running flat is a very rare structure, never preferred unless all of the other scenarios fail, which at the moment it hasn't. So after this wave X, right, we're looking for a wave Y to the downside, so still a continuation of the range. Wave Y, however, might not lead to new lows, right? There's 3 structures that can appear in a wave Y, either a zigzag 535, which is most common. Then you have the flat structure, most common is an expanding flat over here. And then the least common structure in a wave Y is a triangle, which means a continuation of the sideways structure here. But a wave Y does not need to make a new low per se, right? So that's something we are going to keep an eye on. Invalidation for this scenario, as long as price is not taking the high of A, is the low of B. We're going to talk about probabilities at the end when I go through the few scenarios, right? But just in prep, this scenario has the highest probabilities, right? Unless we are going to see clear signs against it. Now let's talk about probabilities that have a couple of issues. And these issues lower probabilities, but it is still good to know about them, right? So pleasure Zohir and good luck MS. So here we have a flat 3-wave A, 3-wave B, and a 5-wave C. Your wave C in this scenario has to be a diagonal, an ending diagonal. Most commonly, a contracting diagonal, 1, 2, 3, 4, 5, where in a wave C, all of the waves need to be 3-wave structures. So zigzags, double zigzags, or triple zigzags. most commonly a zigzag. So 3 wave in 1, in 2, in 3, in 4, and then in 5. However, the probabilities for this scenario are low. Well, the contracting diagonal officially is already invalidated because wave 4 is bigger than wave 2, which isn't allowed. And a smart trick you can use is to simply put a channel on your chart from the low of 1 to the low of 3 to the high of 2. As long as wave 4 doesn't hit the channel, there is the potential for a contracting diagonal. The moment you hit the channel over here, a contracting diagonal is invalidated. Which now means the only diagonal that you can have in your wave C is an expanding diagonal. But an expanding diagonal is very rare, never preferred, unless all of the other stuff fails, which it hasn't, right? So therefore, low probabilities for this scenario. Now, secondly, we have this scenario here, a 3-wave structure in W, then X, and then a wave Y. So this is also a sideways double combo, as we like to say, a W, X, Y, but the structures are a little bit different. We have a running flat in W, then a zigzag corrective structure in wave X, or zigzag family structure, and then wave Y is a zigzag to the downside. I tried to explain it this morning as well as I could in the video, but it's a very cheeky scenario because you have a flat structure in W, which is a running flat, which is very rare because it's the most rare corrective structure in the flat pattern family, right? Then we have an X and a zigzag in Y. That's perfectly fine. The thing is that the target area for a wave Y should be pulled from the start of your wave W to the end of your wave W to the high, the end of your wave X. That is how you would pull the fibs, right? So when you do that, and we talk on the target area for your wave Y, most common is the 0.618 to the 1.236, and the 1.618 is less common. You can see that we have moved below the 1.618, which is not what you want to see in a wave Y. So that really lowers the probabilities. Now you can be a little bit cheeky, and I actually checked. So I know the rules by heart and all the guidelines, but I was like, can I increase the probabilities by being a little bit cheeky here? And the thing is, this is something it's not an official pull for the fibs, but this would be the only way to make it work. But I'm going to explain also why. So the fibs that you see on the chart now, 1 to the 1.618, are taken from this high to this low to this high here for your wave X. Officially, that's not really something that you can do because you want to pull it from the start to the end of W to the high of your wave X. However, in the guidelines, you will read about wave W, X, and Y, especially X and Y, being related to the previous wave structure, right? Commonly related to the previous wave structure between 78 and 138%. Now let me quickly remove this because that means that if you pull a Fibonacci from the low of W to the high of X, right? And I don't think I have these standard, so let me quickly make this fib. So we then have the 786 to the 1.38, and then I drag it to the right side, pretty much the target area I've had earlier. But in a sideways double combo, the waves tend to be related between the 786 and the 1.38. In this case, yeah, right, wave X compared to wave W, that's correct. The top of X is in between this structure. But now, for wave Y, we then relate this wave Y to our wave X over here, taking it from the low to the high. And you can see that the low here is made between the 0.786 and the 1.38. Right? So this would be the way I would then pull my target. And you could even make it a little bit bigger by pulling it from the low. This what am I saying here? No. I don't want to take it from the low of A. So this is fine. Pop. So in this case, you have a big target area for your wave Y, And you want your wave C to preferably then finish, of course, inside the target area. But if you're looking for a diagonal in a 1, 2, 3, 4, 5, you're likely gonna end it below this target area. So it just lowers the probabilities for this scenario. Now, I gotta say, I rarely ever talk about the target area of a wave Y in this way, because the most common target area for wave Y is very simply from the beginning of W to the end to the high, right? So start W, end X. However, your alternative is pulling a fib from the end of W to the end of X, toggle on the 786 and the 1.38. That's a target area as well. And depending on the start of your W, you could pull something there, but it's not relevant at the moment. So yeah. So the one pull, the trend-based fib from here to here, is comparing W with Y, and the normal Fibonacci from the end of W to the end of X is comparing X with Y. Both cases are correct. Most commonly, you compare W with Y, not X with Y, but it is not invalid. Okay, hopefully that's clear. By all means, not too great probabilities per se because of the running flat here, expanding structure in your wave C, and the pull that I've been talking about here for so long. Okay. Another double combo. So we're just debunking and talking probabilities everywhere, right? That's what we're doing. So that's what I've been doing this morning. What is possible in this range? So I put it all on my chart and then talk about it. Here we have another WXY, but this is a double zigzag. 3-wave W, 3-wave X, 3-wave Y. Zigzag in W, zigzag in Y. However, this scenario has significantly reduced probabilities because wave X touched the 07 from the high to the low of wave W. It's not what we want to see. So therefore, alternatively, you can move wave X here, you can move wave W here, and now you have a regular flat in W, right, which is a 3, 3, 1, 2, 3, 4, 5, taking the low of A, that's fine. 3-wave X, 3-wave Y, finished. 1, 2, continuation to the upside. That's your most bullish scenario. However, your wave X is incredibly short compared to your wave W. It only hit the 0.1 fib time taken from the start to the end of W. You toggle on the 0.1, which of course I don't have as a standard because it is so uncommon. So 0.1. And that is very short because you actually want waves to have at least a 0.382 relationship. And the 0.1 is just, it's incredibly rare, right? That the structure is that short compared to a previous structure. So it's not ideal. It's not necessarily an invalidation, but we trade probabilities. And probability-wise, it's not great. So therefore, it works better to have X here and then W here, but then we have the 0.7, which significantly reduces probabilities for a double zigzag. So yeah, not great probabilities. So that then leaves us with, at the moment, the best probability scenario being a WXY. But then we need to see wave C move above 67K. That's then what we are looking for. So a little bit of bullish CVD divergences on the 3-minute, by the way. So that is what we're looking for, where this move down then has to be a wave C, not a wave 1 or a wave A. Alternatively, your low is in, but as mentioned, lower probabilities at the moment that is the case. But if price is going to move above 67, we continue to observe, because of course, if we are looking for an X and a wave Y to the downside, we look for proof of resistance, right? We want to see resistance, see what price does at resistance. Does it change, whatever this is for you, market structure, maybe some divergences of some sort, MACD, RSI, money flow indicator, candlestick patterns, whatever, right? Can be absolutely anything that you use to identify strength or weakness to then get the confidence to trade that particular structure. So that's the probabilities on the 4-hour chart. And the most bearish scenario is incredibly low probabilities, which is that you are having a enormous impulse to the downside here. So 1, 2, 1, 2, and then another 1, 2. But this is very much now a 3-wave structure here. So In this case, your most bearish scenario would be a running flat, or if you take the high, an expanding flat, which is most common, A, B, C. And then you want to see a move to the downside. But at the moment, not the highest probabilities, also on a weekly time frame. Yes, you can move down, absolutely, but not yet the highest probabilities for this scenario, because over here we touch the 886. The 886 is very rare for a wave 2, taken from the high to the low of 1, common for a wave B or a wave X, increasing the probabilities any move after is a wave C or a wave Y, which in turn increases probabilities to move then back up at a later stage. With regards to support, local support, we spoke about that one. We found support on that box that we already had for a while, right? 56.6, 57.6K. Below price, there's not much left. We have one daily naked point of control at 54.4K. No idea actually why it's not on my chart. Maybe I accidentally removed it, but there is a daily naked point of control at 54.4K. And below that, we have the blue box here, 51.6, 51.9. But at the moment, we are ranging at 64K. And price is finding at least a little bit of strength locally. Okay, so that is pretty much it. That's pretty much it, because this retracement to the upside, whenever we're going to get it, is going to decide if we're in an impulse to the downside or wave A or wave C, as I spoke about at the beginning of this live stream. So yeah, either a finished impulsive structure or you still expect continuation to the upside. Yep. So the 618, right? Potential here, 1, 2, 1, 2, 3, 4, 5, 4, 5. 382 has now been hit. Would be very nice to at least hit the support. And then we have to take it from there, because a potential bounce to the upside, that's what's going to decide if we look for the highs or the lows. Probability-wise, though, we did make a high on the highest amount of volume, which does decrease probabilities. This is an impulse to the upside. It does increase probabilities. This is a potential three-wave structure ending with a wave C. For then a potential flat ABC. But then we want to see impulsive structures back up, grind, some 1-2s, bullish CVD divergences, up we go. If we get a corrective structure to the upside after this impulsive move down, and we get a stretched corrective sideways structure, we look for a move down, and the daily naked point of control is next. And that's that. Elliott Waves, it's beautiful. Crazy Potato, how you doing, man? I answered your email, by the way. Akiohara, welcome. Zero, good to have you here. Top T, Belkacem on the one-day time frame. Wouldn't be a triple current W. A WXYXZ on a descending channel. You're talking about 69K down to 15K? If so, that is a possibility. Another low at the moment, and not the highest probability, if you're talking at least about 56K. So not yet, at least, not yet. Elliott Wave analysis at 10. Oh. Short chatting and Q&A. Because, whoops. Because of the run that I'll do with my wife. Oh. Why do I put you? Okay. What a day. For the altcoin streams. Oh, that makes me think. If you weren't here yesterday, I have done a very big altcoin stream. 4 hours something. I think we almost streamed for 5 hours. Here it is. And we covered... One second, I'm going to check it. What did we cover in this one? Ethereum, Doge, Sol, DOT, RNDR, DEAI, ICP, Floxy, Ethereum Classic, Flux, TIA, and Kaspa. So make sure to check that out. We do these on the first Sunday of every month. And depending on how these altcoin streams go, I might increase the frequency to twice a month. And if that goes nuts, then potentially one every week. Yeah, it just depends on of course, happens during the live streams, because I'm very much, of course, focused on Bitcoin throughout the week and with all the analysis. And if I do something altcoin related, I want to focus it in one particular live stream. So cheers, Kanashimi. Always a pleasure. And good to have you here. Welcome to the team. 63.400 was supported over the weekend, so not surprised to see the bounce here. Yeah, and it's also pretty much the value area low of this range. So we're pretty much in the previous range now, of course. If we just pull a range here, then quite simply you're looking for this, no? So you're just back in the range. If we Can we look at the next 63K support as the start 5-wave move up? That depends. So if you do hit 63 here, just below, right? The retracement back towards the upside is going to decide taking the highs or move down. So we have to be patient with the retracement that we get. What I'm going to be looking for is what I explained at the beginning of the stream, is if we do hit this box, which actually would be very nice, then if you get a bit of like, there's only 3 structures that you have to pay attention to, right? Either an impulse, 5-wave structure, a diagonal 1 2 3 4 5 retracement down continuation, or a multi 1 2 1 2 1 2 1 2, and then boom. Preferably, of course, you look for signs of support, maybe some CVD, RSI, MACD, whatever it is in your case, right? So that is, for the bullish scenario, important, yes. And then you would continue to the upside, preferably looking above 67K with the next resistance in the 68Ks, which would be positive for the bigger WXY scenario as well. If, however, the move towards the upside is going to be a corrective structure, we look for price to move down. And then your next area of support is the daily naked point of control. Yeah. So let's have a green day. Where did the day open? Pretty much here. It's at break even now. What do you think about a bearish engulfing on the monthly? I'm not really involved too much with candlestick patterns and engulfing candles, or those type of things. It's not really part of my style of trading. I mean, I've learned it in the past, but yeah, for me it's just a corrective. It's just part of price action, I suppose. Yeah. I bet that of course you can. So there's many examples that you can probably find in history. You move down, you move up, right? Engulfing down, and here you have an engulfing candle up, or even more, and then change of market structure. Here we have a green candle, red candle, engulfing the previous green, and then next you get another green, and then 2 red, but then you fly. So I think it's very useful to look at these type of things, but not for my trading style. It doesn't really fit my way of trading, so to speak. So I don't really have an opinion on the engulfing candle. What you can do is go, of course, to the monthly chart with more history and build statistics on engulfing candles on a monthly time frame, right? So whenever there was an engulfing candle on the monthly time frame, what happened next, right? You can build statistics. Did we continue down? Did we continue up? Did we bounce? How big was the move? You can build statistics, and you can use that for swing trading potentially on a weekly time frame. So hey, we have a monthly engulfing candle, so I'm going to enter on a daily time frame, and that sort of stuff. So but yeah, I don't really use it myself. But it doesn't mean that it's not relevant. It can be very, very relevant. Almost at 11K? I haven't checked. Where we are at. 10,782. Holy moly. Almost 11K. Shit, hey. Goes so quick. 2 weeks ago, we hit 10K for the first time. The 21st of April, we hit 10K on the channel. And here we are 2 weeks later, flirting with 11K. Well, I mean, it's still over 200, but yeah, it's going quick. So thanks everyone. I appreciate your support and you being here. Hopefully you find it useful. Aren't WXYs now overkill when it comes to crypto because they are for more crabby markets? No, WXYs work very well, and it's just a Elliott Wave scenario. It's just one Elliott Wave pattern where, of course, once structures become complex, you switch to WXYs if you can't explain the structure with an ABC, a zigzag structure, a flat, or a triangle. That's when the WXYs come in. And yeah, they're absolutely relevant in crypto. How long does it take before you get a good handle on Elliott Wave theory? Probably about 2 years. Buy-bait chart, look at the weekly level and a value area low for the big range. Find your areas of support and stick to your plan. Always important. B wave completed, C towards 68K, then 5 waves. B wave completed, C towards... Oh, you're looking for a 3-wave structure to the upside in this case, I can imagine. Jay Green, what targets will be in wave Y? We will not... well, the target for wave Y depends on, first of all, how high does wave X go? And then wave Y can be a zigzag, a flat, or a triangle. So we would need... Well, I can put it on the chart at least. I can be very specific, but let me at least put it on the chart. So I'll just leave this this on for now. But if we look for this trend-based fib from the high start, I should say, to the end of W, to wherever this wave C is gonna end. Now let's say it's gonna end around 69K, right? Then your wave Y target areas, the 618 to the 1.236 most commonly. And wave Y can be a zigzag, a flat, or a triangle. If price moves up and moves towards the 70, you can see, right? Everything moves up. So, of course, you can make a new low, but it is not mandatory for a wave Y. So we're still hanging around here. We had some bullish CVDs here. These already played out. So, of course, we already have a potential finished impulse here, 1, 2, 3, 4, 5. But we also have the potential 1, 2, 1, 2, 3, 4, 5, 4, 5, right? That's the alternative structure. If you hit the 618, that is when we know that this is not a wave of 4 anymore. And we're going to be looking at what structure we get here. Either impulsive up and then take the high, or move down again. Do you look at order flow? No, I don't. I did like learn a thing or two in the past about order flow with exo charts mainly. I do like exo charts more with regards to order flow and how they just the UI, I suppose, compared to ATAS, which I never really got the hang of. But yeah, I don't use it. I really like simplicity. Less is more in my trading. Actually, this morning, by the way, I decided to write down my strategies. So of course I trade Elliott Waves, and I have a separate strategy, which your diamonds will know. But I actually decided to be a bit more specific with my way of trading. That's how I wrote it. My way of trading strategies. And then I have Elliott Waves and the other strat. Actually, I added a third one because I want to track a bit of data. And then I wrote down like Elliott Waves, right? What do I use it with? So what are my other tools Hey, remember the 6 steps, eh? Right? What are the other tools that I use next to Elliott Waves? And how do I determine my entries? And then I currently have 1, 2, 3, 4. I have 4 different ways to enter a trade based on Elliott Waves and potentially other tools, right? So I have identified 4 ways of trading using Elliott Waves. Then with the other strat that I have, which is in Diamond, that's very strict, very, very set. 47R in 5 months. I wasn't here in March. If you took every setup, but you can't because sometimes you're gone and whatever, but it's still a good amount of R. Win rate about 60%, 1 to 3 RR. So keeping that up, that's perfectly fine. Potentially looking for a bit more frequency, like more setups in a month, because it's quite low frequency. And then the third strategy is something that it's something that's going on in Diamond already for a couple of months, but I want to check a bit more data myself to see if I can develop a strategy around it in a bit more detail. So and I think it's good to do this. Sometimes you take a step back, look at, okay, how am I even trading? What I also did is I ordered a paper journal, which is gonna from Amazon whenever, I don't know when it's gonna arrive, but ordered a paper journal because I like to get my head out of the chart. And I have a journal which is in online in Excel, but I do like to write, and before entering I like to put things on paper, get my head off the chart and actually write things down. So yeah, 36k will be easy in June or July. The next 2 months will be red as well. That's of course probabilities, no guarantees, right? So it's all probabilities. So it might happen, and they might be red, right? Doesn't mean you go all the way down to 36k. You still have to lose a couple of levels, of course, before that happens. But say never, or never say never, right? Is that to go long? I'm always interested. Stick to your plan, my friend. Douglas, hey Koens, just got a better understanding. What exactly was the trigger for you to go short for this last move? The 618, that was it. So yeah, I did explain indeed. I actually forgot which, I think it was this one. I don't know, either or. It was either this 618, I think, or one lower. I think it was this one. Because highest amount, so this is what I explain in the setups channel, is we had the highest amount of volume in this candle. So for an impulse, I'm looking for a 4 and a 5. New high, lower volume. We didn't. We moved down, hit the 618, invalidates a wave 4, lower probabilities for an impulse to the upside, increases probabilities to take these lows. And we took the lows. Kevin, in that case, we're going to be looking for wave 5 to finish. From the low 56, 57k, and then the final leg up is your wave 5. How you become so disciplined and strict with your rules? You're like AI. First of all, I think you need clarity on what your tools are that you want to use, and then build statistics, and from the statistics you create your trading rules. If you don't have a lot of clarity, it's very difficult to be disciplined, because you're like, oh, I can trade this move, I can trade this and this and this and that and that and that. Like you see trades everywhere because you try to get every move on the chart, left, right, center. But if you have a better idea of your plan, your strategy, right, your data, your statistics, you know what to look for. So you can be more patient. You can wait for the chart to show what it wants to do. And once you hit a certain amount of confirmation or probability switch in your direction, that is when you only take the trade, right? So I think that is something that generally people need. That's of course why I always talk about the 6 steps in my live streams as well, is so people create a plan and a strategy based on data, which will help them with so many different things in trading. Yes, that is correct. What's up, Rob? How are you doing? Traveling for work today. Stopping in to say hi. Good to have you here. Welcome, sir. Good luck with your work. Have a safe flight indeed. Is it possible to stretch the VZD, CVD probably, a blue line to better identify smaller? You can go all the way down to the 1 minute. Yeah, no problem. I mean, but I don't know what you mean with stretching, though. Of course, you can play around with it, but you can't really stretch CVD, I suppose, in a way. Let me do this and that. And this. Cheers, Joachim. Appreciate you. It's experience. Look, I might look smart now, right? But that's only because I've been in the market for years. I've made all my fails, or most of them, made the mistakes, got the scars, got the experience, studied my ass off, and now I look smart. But I'm just like all of you and yourself, just a regular guy trying to make a profit on a daily basis. And wherever you are in your journey, if you are not yet where I am, maybe with regards to Elliott Waves or discipline or a plan or strategy, doesn't matter, but I've gone through all the steps. There's probably people watching that are more profitable than I am, maybe do a better job, have a better career, earn more money, whatever it is. And I am following in their footsteps, so they might look a lot smarter as well. They have more experience, but in the end, we're all in for the same goal, which is making profit, of course. So it's very much related to experience, which you will get as long as you stay in the market, of course. Do you look at the VWAP? Not in my trading. Used to in the past, but I don't really like indicators and lines that move. I like set levels. I don't like stuff that moves. So does it make what's up, by the way, Abusni Sok? I wrote you a message in Discord. Does it make sense to look at volume profile of that range we've been in the past 2 days? Yes. Well, the first bounce was the point of control. So the support here was the point of control that you hit of the previous range. So if you take a volume profile here, then wait 1 second. I need to include this little bit as well. So then you can see here we hit the point of control, little move towards the upside, back to the value area high, move down, hit the value area low, move up, back to the value area high. So we're pretty much in the same range as we were the past couple of days. Now we're hitting the 382, ranging against just below the value area high. And so yes, absolutely. So we've been in a range, we broke out of the range, came back in the range, and now we're pretty much range trading again, in a way, one could say. So yeah, it absolutely helps to keep an eye on the volume profile. Yeah, you didn't see the point of control on the chart because it was already hit. So if price would have been here by the time I was going to go live, I would have a red line on my chart here. But because we already hit it by the time I went live, I don't put it on. Yeah. He got married. Exactly, Silan. That's it. Yeah, that's the way to go. It's a lot less stressful. Marriage is a lot more stressful. No, that's a joke. It's not true. Sometimes the low and highs are very tight together, so it would be nice to stretch it along the price axis. Oh, yes. Silan, what you can do is also check the value of the CVD line by opening the indicator. Oops, not that one. Opening the indicator section here. And now whenever I move my cursor, you can see the values here in millions, right? So you can compare if the line, if you're not sure, like, is there a CVD here? Is there no CVD here? Because sometimes on the chart, it's very difficult to see, did we actually dip below this low or did we not dip below the low? And what you can then do is look at the data here and then see if the value is higher or lower, just to identify if there's a bullish or bearish CVD divergence. It doesn't happen often that you need to use the number here at the top to identify divergence, as usually it is quite clear. But there are occasions where I do check it, yeah. Check it. Douglas, welcome, my friend. Welcome. Douglas Cullev. Talking about Rob as well. Gold is gold. Well, Douglas is gold now as well. Excellent learning material. Cheers, Rob. Yeah, gold is the Elliott Wave course. All my brains packed in content. So yeah, Douglas, welcome to the team. Top step of the podium, where we saw Lando Norris yesterday, by the way, for the ones that watch Formula One. What a great race that was. Very happy for Lando Norris. But Douglas, welcome to the team. Send me an email, koenztrading@outlook.com, and I will make sure to get you sorted later today. Make sure to send me your YouTube, Discord, Telegram username, and then I can get you access everywhere. Took me long enough, but here you are. It's never a requirement. If people want to learn, they can always join, of course. So cheers, Mark. Thanks. But yeah, welcome to the team, man. Welcome to the team. Happy to have you here. Every week is also a live stream in gold, feedback and Q&A live stream, so you can ask them some questions. All in ETH now, 10K target. Potentially, at least all-time high has a high probability as we hit the 886 as well. Moving down towards the golden pocket, very common 886 touch back to the golden pocket, find support and continue. So that would be quite interesting to see. But yeah, I covered ETH in the altcoin stream yesterday. So it's this video, homepage of my channel, scroll down, altcoin Elliott Wave analysis. This one here. It's quite crazy actually that the first stream, wait. Why are they the wrong way around? It's the right one. This is the new one, streamed 21 hours ago. 1 second. Let me immediately correct this. Because in the playlist, I think it's a brand new playlist and I need to change the order. Date published, newest, save. Okay, 1 second. Let's see. Refresh. There we go. Very nice. There we go. 21 hours ago, this one. That's the one we need. So, and that's where ETH has also been covered. Where's chat? Can you explain about 618? Yeah, so the 618 is I guess I can keep it short. So the golden pocket is of course very important, and the 618, as I like to use it, has big benefits with identifying an impulse or corrective structures. So in a nutshell, what you have to know about the 618, which I think is very valuable, is if you have a three-wave structure or an impulse, the 618 matters a lot. So we have an impulse, 1, 2, and then we have 3, 4, and then wave 5. And we also have A, B, C, right? Now, after an A, B, C, which is a corrective structure, you want to see price move back towards the downside and eventually take the low, because it is a corrective structure to the upside. But you can only really change market structure if you have an impulse. That's at least what you have to start with. But if you get a three-wave A, B, C and start to move down, you're going to look for a price to move down. Now, in an impulse, 1, 2, 3, 4, 5, what we're looking for is a retracement for wave 4 in the area of the 236 to the 05. That's your common target area for a wave 4. After 4, we want a wave 5. And we want a new high on lower volume. So if the volume in wave 3 is the highest, we want to see a 4 and a 5. Or we shouldn't even say wave 3. If the volume in a local move to the upside, look here. This move, look at the volume, look at the pop, right? If the volume is highest in a local move to the upside, we identify that as a wave 3 at that moment in time. Because a wave 3, by far most commonly, has the highest amount of volume. So after this candle here, what we are then looking for is a wave 4 and a wave 5, meaning a bounce in the 236 to the 05. However, the moment you hit the 618 after a candle with the highest amount of volume and you don't create a 4 and a 5 and a new high on lower volume, but instead you move down, hit the 618, a wave 4 is invalidated, and then the probabilities are higher. It was a three-wave structure in an ABC, as wave Cs also like to end on a high amount of volume. So the moment price then moves down, hits the 0.618, probabilities are higher to look towards the downside to take the lows. Of course, you can get a WX and then a wave Y. Nonetheless, even if you bounce, so imagine you would go short with the 618 here. Stop loss above, target is the low, right? Even if you get stopped out here, you got important information, and now you're just short at a higher price. You're just going to look for a new short setup higher because you're expecting the low to be taken. Except for if you're into diagonal structures, right? 1, 2, 3, 4, 5, but that goes further than what we talk about now. So then because then we need to talk about more than just an ABC or an impulse, because then we need 5 ABCs, and so it's a bit more advanced. But this is why the 618 is so important in Elliott waves. It makes it very easy to identify a zigzag versus a impulse. Do you have different strategy sets for different market conditions? What worked this year didn't work from 2 years ago? No, at the moment, so far everything works as it should. I don't really have different strategies for different market conditions. I just have a set rule set. I have a set rule set, nice one. So I just have a rule set, a set strategy, and as long as it creates a good amount of profit, there's no reason to change it. So I do notice that with the strategy that I developed based on data already for, I already have it for a long time, the frequency of setups, maybe it's just because of the latest revision in October last year, but the frequency of setups went down, but it is still 47R in 5 months of trading without March, because I was gone in March. So, and that's not bad. It's just that there's very few setups in a month. Last month there were actually 11, which is quite a lot nowadays, because other months is like 6 and 5 and 7, so it's like 1 a week. But hey, profit is profit, and of course you won't take every trade because sometimes you're not there or you're asleep or whatever it is. But you should be profitable. So yeah. With regards to Elliott waves, it's very much the same. And also the way I trade Elliott waves hasn't really changed. I'm always trying to improve and look for different ways to enter. But yeah, it's not really like my trading changed. Christoph Domagala, just want to say you're amazing. Thank you. Thank you. Appreciate your comment, man. Just popping in and dropping a banger. Appreciate it, man. So does Koen, right? Exactly, Mark. Take it in, Mark. Take it in. One thing, I'm a practical type learner, so seeing your post, your trading, why you did will be helping my trading, building my strat. That is already what I do, Douglas. It is in the Koen's Setups channel where I explain potential setups, and sometimes potential where I say, hey, I have interest in this. And if I take it or not, but that's on yourself. And sometimes I literally say like, okay, I actually took this. So yeah, but I always explain with regards to setups why. So also here, this was a long from the low 57. My entry was actually 56, but I put it here 57. So it's not too accurate. It's not like this is my position, but it's just like, that's what I'm looking for. And potentially more swingy. And I said stop loss can either be below the range or the 1.618 that is a low probability target for a B. So I had my stop below the low though, and I was looking for that move towards the upside, which of course has been quite nice. 8 more likes to 100. We're getting there. Douglas, that's for free. So like, however, here I only clarity. The Koen's Trades channel is just where I post trades that I have had or have posted. And it's not even all actually currently at the moment it has been all. But these are the stuff. This is the stuff I share in setups, but this is after the fact. In setups, I share during the moment or before, and I say why. Like I hope people learn How do you trade Elliott Waves? Why is this a potential relevant setup? Why did it go wrong? Why did it go right, right? But I don't talk about trade management in here. I only post about, hey, this is it. But I don't say what I do with my stop loss, where I TP, where I'm interested, because that is stuff I more like reserve for Diamond, where in Diamond I talk a lot more about, hey, I'm looking for these lows to be taken, having a TP here, moving my stop loss to break even, wait for price, what it's going to do. And that is where I talk more about the management behind it. So that those are just like, I suppose, the levels. Gold is the Elliott Wave course. And Diamond is like learning how to build a strategy. So building your own strategy. My strategies are in there, my way of trading and also management. Gold is Elliott Wave course. Silver is short-term updates. And but these groups, you can, if you join Discord, Koens Trades is visible. Yeah, and the Koens setups you get access to if you just follow the steps in the channel. What's the max flip time for the C wave in a flat? 2. Taken from the start of A to the end of B. After that, the probabilities really go down for C. Yeah, it's below the join button. Holy moly, I can't keep up. I'm chatting too much. Okay, in the scenario where the low might be in, it's possible we truncated instead of leading diagonal. In the scenario where the low might, is it possible we truncated instead of the leading diagonal? No, so I would go for the leading diagonal because a truncation is extremely rare. Extremely rare. I've not seen it on the Bitcoin chart. Maybe you have to go to like second charts, but it's very, very rare that you see truncations. So I would always go for a leading diagonal or multiple 1-2s at the lows here compared to a truncation. Dan 63.5. Oh, that's the low. I look at it. The question is, what was your plan? Of course, that's not what you want to hear. Would you wait or take the loss? I think step number 1 is identifying where are you wrong. So what is the invalidation of your setup? So you entered with a plan because you should, right? So you entered with a plan. You had a certain idea, a certain scenario in mind, or you saw certain signs that made you short. Where is your invalidation? As long as your invalidation is not hit, stick to the plan because you made a plan, right? So stick to the plan. The moment you see, and this depends per trader, but if you also have, this makes it a bit complex, but if you also have counter signals like, hey, I'm entering because I see this on the chart. But the moment you see stuff on the chart that goes against your initial plan, never be afraid to change the plan. But you need to have written this down. You need to have a plan, strategy. In other words, you would need to go through the 6 steps of first try, step 1, try as many free tools as you can plus the indicators and stuff on TradingView. Step 2, find your favorite tools, build statistics. Step 3, combine some of your favorite tools, build more statistics on the combination. Now you're making a plan. Step 4 is tweaking and adjusting, remove a tool, add a tool, build more statistics. Step 5 is start trading your strategy, low budget, and work on your mental game, right? Trading psychology, book in the description. And then step 6 is increasing your portfolio size. But now you have a very clear plan, clear strategy based on data, which really helps also with emotions. So you had a plan. Where is your invalidation? That would be my question. If your invalidation is already hit, you need to get out. If your invalidation is not yet hit, you stay in. If, however, you have you have identified in making a plan counter signals, if you see those, you get out because that's part of the plan. So it very much depends on your plan. Of course, I can't really say what I would do. Yeah, maybe potentially true as well. Cheers, Malon. Good to have you. Also, thanks for all your comments, by the way. How do you do your point of control? Pulling a volume profile of this range over here. If you, however, talk about the daily point of controls and weekly point of controls and those type of things, then it is ATAS. And ATAS is, if you go to Discord, good to know channel here. The website, plus you can download the templates there, the ones that I use. I'm Oscar. Flotti, what's up? Still waiting for the 3RR today. Formula 1 was really cool. Max was more happy about Lando's first win. Yeah, it's nice to see, but they're very good buddies, of course. So yeah, I love the race. It was very nice. Safety car giving a little bit of spice to the race as well, with Magnussen and Sargent having a little accident in turn 1, 2, 3. So yeah, it was a fun race. How can I draw the most accurate fib? This is an interesting question, because if you just take a fib without Elliott waves, you usually take it from the low to the high, but with Elliott waves, you take the fibs from specific pivots, depending on the waves and how you count the waves. So at least most commonly, let's keep it easy. If you're new with Fibonacci, always take it from the left to the right. And if you want to look for support, take it from the low to the high. If you want to look for resistance, take it from the high to the low, right? Not this high, this low to look for resistance here. From the high to the low for resistance, from the low to the high for support. Of course, with regards to Elliott waves, if we are looking for 1, 2, 3, 4, 5, then we take a fib from the low of 2 to the high of 3 to spot support for 4. But yeah, that is where you first need to know Elliott waves before you can really change your Fibonacci game. I've been a fan for a while now. I'm also impressed by the discipline and knowledge of how you're sharing at the same time your mother. So yeah, I'm here to learn. I love to hear it, especially I'm here to learn. Christoph, thank you. I mean, really love your kind words. Brings a smile to my face, for sure. I mean, actually, this time you can see it because I'm live, of course. But also the comments. If people comment below a video and they share what they are learning, and it makes me happy, and that's what I do it for. So hopefully people learn a thing or two. And thanks for being here and appreciating the effort. And I'm just happy that you are learning in Elliott waves or maybe other things as well. So thank you for being here, and thank you to the other 200 also for hanging out here during the live stream. But this stuff, it makes me happy. I wake up in the morning and I always post a video, of course, at like in the evening somewhere, 7, 8 p.m. or 9 p.m. sometimes, or 10. And then I wake up in the morning, I see the comments, and I always reply when I'm in bed or early morning behind my PC. Cheers, guys. What's your average of wins to losses? In Elliott waves, I actually don't know because I don't really track my Elliott waves in data. So with my personal developed strategy, I really track the data. With Elliott waves, I only track journal, but I'm not really tracking the data because every setup is different in Elliott waves, while with my personal developed strategy, every setup is exactly the same, so it's easier to collect data. But to answer your question, my win rate over the past 5 months without March is 61%, 47R, total of 33 trades, either win or losses, 20 wins, 13 losses, 25 break-evens, by the way. And yeah, that's perfectly nice. So no complaints. With Elliott waves, it's very much higher. My win rate, I think, is higher with Elliott waves if I would track it compared to the other strat. It's just I just completely manage it different. So my personal developed strategy, the target is always a 1, 2, 3 RR. Right? Rules are incredibly specific, which also causes like not too many setups in a month. With Elliott waves, there's a lot more opportunities. But some trades with Elliott waves might be a 1-to-1. Sometimes you get a 1-to-20. Sometimes a 1-to-0.5. Sometimes I put my stop loss at a 1% risk, but I can quite quickly put it down and limit my risk to 0.25 or 0.5, and I get stopped. And so I actually think that Elliott Waves gives me a higher win rate. And once you get a good swing with Elliott Waves, also more profit. So I think down the line, probably my Elliott Wave trading is more profitable. But what I like about the strategy is that it's the same shit, different day. That's what I love. It's just exactly the same every time there's a setup. So it's just like a no-brainer. That's what I like. That's what I like about it. It's just like, oh, setup, enter, done. Gold, if you click the join button below the video, you get a new video pops up. And I also have a Patreon, but you have to open the description to find the Patreon. Matty GP, how you doing? Love your words, still learning and got ways to go. It's the way to go, exactly. Still learning. I love the learning stuff, eh? Welcome, Matty, and yeah, keep going, keep learning. You'll never move backward if you keep it up. Keep learning. Is it a bull trap? I mean, arguably your bull trap in that case is already finished because you entered the range. You moved all the way back down to the range here. So pretty much your bull trap in that case is done already. And now we just wait and see what price does here. I think we found support on the value area low. Would still be quite nice to actually hit the box because support here is arguably better. But yeah, we just wait for this move down to finish, look for a bounce, and then either impulsive bounce or corrective bounce, which will give us insights to what's next. So we expected this whole move this morning. It was written in the probabilities. I haven't changed these since the morning. So with the bull CVDs in an uptrend, probabilities are higher to take the highs, which was on the 50-minute time frame. We did that. Potential to end the wave 0 and impulse, so eyes open for a potential retracement. And now we are in a retracement, and based on new data that we have, we are looking for either a C, A, or 1. And yeah, that depends on the retracement back towards the upside. At the moment, of course, a little bit of a break in the move to the downside here. Is it possible to form a double zigzag, triple zigzag, double three, triple three within? No. So in a W, Y, Z, most often you talk about W and Y, but those are only allowed to be simple structures. So either a flat, zigzag, or a triangle, but no double zigzags or triple zigzags. So yeah. Pleasure, Alan Kasari. Never bothered answering questions. That's what I'm here for as well, right? Teaching guys a thing or two. So hey guys, I gotta go for a run with my wife, yo. I'm training her to run 21Ks in Nice in early November, right, in the south of France. So we're gonna go for a trot, and I'm currently zone 2 training, in the training plan that I got for her, we're first building the foundation, right? So it's zone 2 training. That is what we're starting with, and yeah, I'm training her to run the half marathon. So today on the agenda is a nice 5K zone 2 slow run, building the base, and then later we slowly pick up the pace. Right? It's all about starting with that zone 2, nice and relaxed, enjoying your runs as well. If you're a runner, by the way, or any other forms of sport, make sure you check Discord. We have a sports channel here as well. I actually have to check what's been written here, but we have a sports channel where we talk about stuff. Of course, I also have Strava. Not sharing Strava too often, but yeah, it's fun. You know, it's fun. It's sports, healthy. I got my thing in the back as well. You can't miss it. But yeah, thanks for hanging out. You know what I'm looking for. We have covered the Elliott Wave scenarios and you know, in the 4-hour, but also locally on the 50-minute time frame. What I'm looking for: areas of support, resistance, potential bounce, the structure of the bounce. Stay calm, stay patient, stick to your plan as well. And tonight will be a update video, of course. Well, you know, probably around 8-ish p.m. usually is the case, 8, 9, or something, somewhere in the evening, right? So see what price is going to give us. But for now, thanks for hanging out. Thank you for being here. Thanks for the kind messages as well. And I will catch you at the next one. And tonight again a video, next live stream tomorrow afternoon Central European time.